Many of us look at the stock market and see a closed club. It feels like a place reserved for those with a massive fortune, a degree in high finance, or incredibly good luck. Building long-term wealth actually starts with a small shift in perspective and $100. Instead of treating the market like a high-stakes casino, think of investing like planting a garden. The first step is just securing a simple patch of soil to plant your seeds. In the financial world, that patch of soil is your brokerage account. These accounts are easily accessible. You can open one online for free, and many require no minimum balance to start using them. Building wealth begins once you move past the initial intimidation of breaking ground. Once your account is open, you have to decide what to plant. Putting all your money into one single company is risky, because if that one stock fails, your whole garden fails with it. You can avoid that risk with a broad market index fund. Think of this fund as a single seed packet that already contains hundreds of different seeds mixed together. When you buy just one share of this fund with your $100, it automatically divides into hundreds of smaller pieces, spreading across top companies. While a few might struggle and turn dark, the broader market expands, pushing your overall value upward. Spreading your money this way reduces the pressure to pick winners. You trade the anxiety of guessing for the security of broad market participation. With your seeds planted, they need consistent nourishment. Instead of flooding them with water once a year, they need a slow, steady supply. You can provide this by setting up an automatic transfer of $25 or $50. This moves money from your bank to your investment account on the exact same day every single month. Automation bypasses the urge to hesitate or the impossible task of perfectly timing the market. Robotic consistency over time is mathematically more powerful and far less stressful than occasional large investments. Smartphones make it possible to watch your balance fluctuate by the second, creating a constant urge to check on your progress. Reacting to daily dips is like digging up a seed to see if it's growing, only to violently yank it out of the dirt. To avoid this, you must follow one strict rule: leave it alone. Do not sell your shares when the market looks red. In this blueprint, doing nothing is a calculated strategy for financial survival. Staying still while the market is volatile is often the hardest, most necessary part of the plan. If you can stay still, the historical results are significant. Over the long run, the broad market has returned an average of roughly 7% a year. As the years pass, compound growth begins to accelerate. Even a modest habit of $100 a month starts to snowball. This chart shows that snowball in action. Over 30 years, monthly contributions curve sharply upward, crossing $120,000. Separating your cash from the interest earned reveals time as the true multiplier. The final decade's growth completely dwarfs your initial cash. The blueprint is simple to start: one account, one fund, one habit. Anyone with $100 can step away from financial anxiety and plant the seeds of compound wealth today. Real investing success comes when you have the patience to outwait the market.